Hello and welcome to ATF TV. I'm Christine Zhou reporting from London. Today we are joined by Jonathan Rogers. Jonathan is the founder and CEO of Singapore-based financial public relations company Ostinato Associates and has worked as an investment banker, specializing in fixed income and structured products. Welcome to ATF TV, Jonathan.
Good afternoon, Christine, and it's a pleasure to be here.
Thank you. Could you give us a quick overview on current trends in today's Chinese bond market, please?
The narrative right now in China's domestic bond market is one of internationalization. So we have seen the Chinese financial authorities gradually opening up this market. We've seen the big foreign credit agencies allowed in to rate Chinese companies. We have seen the big international investment banks allowed for the first time to sole lead domestic bond deals. And we are also seeing in China very much mindful of the importance of its green bond market, which is growing exponentially, to international ESG-focused investors who are very pernickety when it comes to standards. And so China has recently published a green bond catalog which aligns its taxonomy much more closely with that of the EU. So that the process is one of internationalization. That is very much the theme.
In your ATF piece, you talk about contradictions in this market. What are these contradictions?
The contradiction that is happening right now in China's domestic bond markets against this theme of internationalization, tremendous interest in China's domestic bond markets for the reasons I mentioned just now, also to do with the fact that the Chinese bond market yields relatively higher than those in the rest of the big international economies, is that we've seen a spate of defaults recently, Yongcheng Coal being one of them, to the tune of about $4 billion US dollars. And these are alarming in the sense that there had been a major liquidity crisis in 2013, which saw overnight rates go up to about 50%. There is a fear of credit markets seizing up because of these defaults. So it is an urgent situation, but that is the contradiction against this extraordinary momentum. We have concerns of default, we have concerns of malfeasance, we have warnings from the Vice Premier that urgent action will be taken if such malfeasance has occurred. So that is the essence of the...
How do you think the continued opening of China's bond market might affect global finance?
The opening up of China's domestic bond markets internationally is really very much a case of a rising tide lifts all boats. And I think the theme I would emphasize here is very much one of ESG. If we look at the incoming Biden administration, there will be a dial back on the reluctance of the Trump administration to get involved with that agenda. And so therefore, as China's bond market increasingly focuses on ESG, environmentalism, green bonds, etc., the US will start to calibrate in that direction. So I think it's really the overall picture is very positive. There's nothing that will happen in the Chinese bond markets independently that will affect other bond markets in terms of the monetary dynamics or the market pricing dynamics, or whatever. It is very much a case that all of this is being driven by green finance, and that is very much the narrative.
What is your take on the bond payment defaults by Chinese SOEs and the way China, especially the PBOC, is handling the situation?
In relation to these defaults, yes, the PBOC has voiced its concern. And it may well be the case that the PBOC has actually already acted. We are told that there is a very strong and powerful market bid for the defaulted paper. Now that often indicates the presence of government-linked entities that may well be out there buying the paper. Also, we know that vulture funds are present in the market and they're scooping up paper. And again, this situation, there may well be money to be made on these bonds because there could be either we work through a grace period that is pretty conventional in the event of a default, or there is an orderly debt restructuring. So I think it's very much, the Chinese authorities are very much cognizant of the fact that they have to intervene, and it seems to me that they probably already are, given the presence of that very powerful market bid for this recently defaulted paper.
Thank you, Jonathan.
Thank you very much, Christine. My pleasure to talk to you today.
We look forward to having you back with us again, and thank you everyone for watching. To read more on this topic, check out asiatimesfinancial.com for the world's best news on Asian markets, economies, and more. I'm Christine Zhou reporting from London for ATF TV.